Good weekend, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition for this Saturday, the 3rd of August, 2024. Well, you know the events of the week, but let's review them just very quickly here to get an idea. We had the non-farm payroll. I put in red the big numbers. Instead of the expected, I saw ranges 175 to 185. They got 114,000. I mean, that's a big amount less. That's 70,000 less. The June unemployment rate shot up off of that to 4.3%, and then they lowered the non-farm payrolls from June from 206 down 27,000 to 179. So we're seeing shrinkage in these numbers. We also saw the average hourly earnings month over month came down by 1/10 and down by 1/10 on the year over year. Now, just as important is this chart. This shows you that 461,000 employees said that they couldn't work in July versus the 50,000 average. Why? Hurricane Beryl and autos. In the autos where the plants are, they retool often in July. Those workers go off. Now, if they come back in August, those numbers will shoot back up and you'll get a revisionment in the number potentially in the August number. That doesn't mean they're going to revise July's. We'll see if July's gets revised all on their own. But when I say revision, some of these numbers should be added back for a stronger August. Come Monday, we get the S&P Global Group, their final July service sector PMI, and the word is final, so it just goes against the earlier number. And the ISM will release their U.S. service sector indices for July, and that comes out at 9 in the morning. It's expected at 51, which would be expansion off of last month's 48.8, so I think those are important to look at and to see just what you've got with them. So, the big news, of course, is that you're going to read over the weekend that the NASDAQ has entered a 10% correction plus off of its top that it's recently made in its correction territory. Yeah, it is, and it's much needed. When are you going to correct? And eventually all markets correct. You do know that, all right? This is very normal. Do I think the market is panicked? A little bit in this way. We knew there was going to be a transition at some point from the tech companies to where the Fed had to come in and begin making the move. The Fed is being highly criticized that they should have moved earlier. The reality is when. They weren't going to move in June. They didn't have enough data. That's very clear. They would have had to have abandoned the data, which they could have done, and gone just to total forward guidance. The criticism is coming in by some for July. Does it really matter for 2 months? I'm not convinced it does. But this is what you will hear, and this is how the market's playing it out. The gold market didn't hold the big gain. You know, it got up to 25.22. It didn't just correct off that number. You fell back here, what, 50 some odd dollars an ounce. The silver market off the early morning gains where everybody went crazy in buying these metals, in my opinion, sold off by the day and $1 down from the high. Copper market, it's looking to China to do something. There's big criticism coming in on China, even by, believe it or not, the boldness of one of their central bankers that's on the committee, saying that it is time to address the housing and infrastructure, and that goes against what they do. He may not be around long. In the dollar index, you were down 120 points as most currencies not only took off, but they held the gains against the dollar. So we have been, at least I have been wondering, is the dollar going to get bullish or bearish off of this? It acts like now the game is being known that the cuts in the dollar will drop the dollar over time. And that means the market is looking for contraction in what the U.S. is doing, and that's why the Fed is moving. You had big rallies in the bonds and notes. Mortgages came down. They'll be in the 6.6 area, as I understand it. Grain's up, but you typically get this on a Friday as it takes a guess, how's the weekend weather going to be? Then it's got to prove if it can follow through. And the slowdown in the U.S., coupled with the slowdown, and I'm talking economic slowdown, in China, weighing on the energy markets, even with the suspected attack that Iran is going to with its surrogates. The word is they're going to do it more, and this was today in Reuters, more and more it's going to be surgical, as Israel is accused of doing in Tehran. In any case, you can see that you got a 3.27 decline going, and this is on a monthly chart so far. And remember, it's only the beginning of the month, so keep that in the back of your mind. When you go to the weekly chart, you can see you've backed off from 56.64, and this is a low point now at 53.31. Market can go more. How often have you heard me talk on the weekly? I think we can come back to the 18-week average, and that's where the game will decide. Does it want to correct more? Does it want to hold from there? You're coming right into it now. When we go to the weekly chart, look at the pattern, and you'll see that you have a pattern of a higher high and a lower low. So once we took out this low, which we did a week ago, by the way, it didn't just happen. We did this not this week, the week before. You broke the uptrend. The market went down and magically, I can't figure out how that happened, stopped at the 18-week moving average of closes. You hear me talk about that so often that that's where I think markets go to figure out what they're going to do next, and that's just what happened. The next step down, if the market just lets go, well, it could be the 45.16, but more likely it would be the Bollinger Band at the 50 level if it wants to get that far down. Remember, from where it's at right now to get there is about, 300 points. It's very doable. So don't write that off. It can happen. And your momentum, you just lost. You just lost your bearish embedded reading, okay? So last week you lost it. Remember, it's 77.60. When you lose it, my rule is before you go up and take out the most recent high, if you're even going to do that, the market should make a run to the closest main moving average. But the only thing that can throw that off is you re-embed the week after, which would be the week where it just ended. Or the market goes down and starts making a run to that number. It was done. You made the run to the number, and you can't re-embed at this point. You got to go through a whole process that would take the better part of a month. So you can either stall here or you can get more of a decline. When we look at the Dow, you've got a downtrend in terms of the pattern. You have lower highs, lower lows. The bias is still up. I would expect that the market's going to go to that 18-week average and fight a battle. You never did embed. You're correcting an overbought condition. The NASDAQ is the market in the most trouble. The low this week was 18,385. It did not take out 18,241. So the pattern on the swing line, at least in the chart action, is still higher highs and higher lows. I wouldn't be surprised that you either on a rally stall out against 18,936 or the market just tries to get through that right away. Either way, momentum's pointing down. Market, as I see it, not a buy. And as I said, you're in the 10% area now of the correction. So with that taking place, do we go down another grouping to get down here? I don't know. In the Russell, look at the huge outside week to the downside. So the traders that have been buying this got caught this week. Okay, but I don't know that they're wrong. And the reason is when you start cutting interest rates, you help these low-cap companies. That is what it's about. So I think they're going to get some benefit. I would not be surprised. In fact, I expect you're going to get to the 18-week average to refight a battle there. In the 5-year note, no, I wouldn't chase this market over the upper Bollinger Band. But the big question is, are we coming out of sideways action, or is this a breakout? To get a classic breakout, you have to take out this week's high, close in the very top of the range this coming week. If not, the odds favor you'll come back to the Bollinger Band and fight a battle. The same thing is true of the 10-year notes. But here you've got an embedded reading under your hands. So I think big breaks in this are going to find that they find new buyers in this market. In the dollar index, you fell and stopped. Bingo, just like at the 18-day average, near that zone of the lower Bollinger Band. It's not a buy zone there. Now the market's going to have huge resistance on rallies. If it does take out this week's high, it tells you the market doesn't want to let go that much. If it keeps dropping here, be careful. You can get a bigger surprise than you think. And ultimately, why not the 200-week average of closes? That could be a number that it goes to. In the euro, The next resistance point is again the upper Bollinger Band. It's overbought. I don't think on this move it's ready to go to the 200-week average up here, but it could. Everything is bullish about the chart until this week's low is taken out, with the exception that it's overbought. And you'd expect that on big moves that it gets overbought, oversold. The Canadian dollar, number one, has been fighting a battle at this 18-week average of closes literally since February. You look at that. You got over it for a brief period of time, 2 weeks, back in the end of June, July, and now you've let go to the downside again. That means you'll have resistance here. I don't see on a weekly chart a trend other than the bigger pattern certainly down. We see that. But a trading trend, I'm not convinced I see one. The yen got all the news it wanted this week. It got a rate hike. It got a plan to start cutting in an aggressive manner through 2026. The way that they're going to get rid of security buying, be less and less and less. And it's the unwind of the carry trade where people were using the yen, if you will. They'd borrow in different currencies to own certain ways and make money in other parts. That was the goal. That's called a carry trade, by the way. This is now not part of it, in my opinion. I think you're going to see continued unwinding. Bitcoin, it's in the middle of no man's land. It held the Bollinger Band. It comes up and it can't hold rallies, and you've got a huge outside week to the downside. Now, if this week's high is taken out this coming week or the week after, then I'd expect 72,000. Barring that, I expect a choppy trade, not a trend trade. When I look at Brent versus WTI, it's gotten back and stayed under this $4 level. Prices coming down, and look at what you have here. Now, we've seen the OPEC ministers meet, and they came out of the meeting and they said they are still very much online for an October production hike. Well, in order for that to happen, you can't have oil at these prices. You've got to get oil back up, I think, over here. If it's in the 76 range, if they put out more oil on the market, and we're all doing that, more supply, weaker U.S. economy, and certainly a weak Chinese economy, do you think that's going to lift prices? So I know that there are people out there, and I saw a major oil trader come out on CNBC this week and say that the August setups and patterns, according to their AI models, will be the most bullish they have seen in years. Well, maybe his pattern likes to buy deep breaks in the market and look for the pullbacks. I don't know their pattern. But you got a higher high and lower low, and you're sort of stuck in this sideways action.